Okay, I'm reading credit by banks for the purpose of purchasing or carrying margin stock. And this is Regulation U. The Securities and Exchange Act of 1934 was a congressional response to the stock market crash of 1929. The control of margin requirements was a major purpose of this act. Congress specifically directed the Federal Reserve Board to write regulations that would apply to broker-dealers and to banks. The purpose of Regulation U, credit by banks and persons other than brokers or dealers for the purpose of purchasing or carrying margin stocks, was to fulfill this directive as it applied to borrowers whose loans are to be greater than $100,000 and that will be secured by margin stock. Loans made for the purpose of purchasing margin stock are subject to additional limitations. Regulation U was completely revised in 1998 to implement the requirements of the National Securities Market Improvement Act of 1996. This law made sweeping changes to the regulation of the securities markets, including the presumption of state changes to the regulation of the state security laws, the narrowing of margin requirements, and the increase in flexibility given to the Securities and Exchange Commission for the purpose of exempting entities and transactions from securities laws. The authority of the Fed was significantly narrowed under the law. It lost some of its regulatory power over loans to broker-dealers. It has no authority to govern those transactions unless it finds the investors need to be protected. The law also reduced the distinction between banks and other lenders. To implement the provisions of the law, the board eliminated its Regulation G, incorporating all remaining provisions into its revised Reg U. Coverage. A. Persons or institutions other than broker-dealers, including banks, that extend credit for the purpose of buying or carrying margin stock if the credit is secured directly or indirectly by margin stock. That's who's covered. Does not apply to exempted borrowers, which you have one. An exempted borrower is a member of the National Securities Exchange or a registered broker or dealer who A. maintains at least 1,000 active accounts annually for persons other than broker-dealers and persons associated with brokers and dealers, earns at least $10 million in gross revenue on an annual basis from transactions with persons other than brokers, dealers, and persons associated with brokers or dealers, or earns at least 10% of its gross revenue on an annual basis from transactions with persons other than broker-dealers or persons associated with broker-dealers. If the borrower has been in existence for less than 1 year, it may meet the exempted borrower test based on a 6-month time period. 3. If a member of a national securities exchange or a registered broker or dealer ceases to qualify as an exempted borrower, it must notify the lender of this fact. New extensions of credit, renewals of extended loans, and additional draws on existing lines of credit to such a borrower must meet the requirements of Regulation U. Subpart C does not apply to exempted transactions. Banks may extend and maintain purpose credit without complying with Reg U if the credit is extended to a bank, to a foreign banking institution outside the United States, to a qualified employee stock ownership plan, to a plan lender, a corporation that makes loans for the purpose of acquiring its own margin stock or that of an affiliate, to finance an eligible plan, to any customer other than a broker or dealer, to temporarily finance the purchase or sale of securities for prompt delivery if that credit is to be repaid in the ordinary course of business on the completion of the transaction against securities in transit, or to enable a customer to meet emergency expenses not reasonably foreseen, and if the bank obtains a good faith estimate from the customer. Emergency expenses are ones related to unforeseen death or disability, not a chance to make a profit. Margin stock includes equity securities registered or having unlisted trading privileges on a national securities exchange, over-the-counter securities that qualify for trading in the national market system, debt securities convertible into margin stock, and warrants or rights to subscribe to or purchase a margin stock. 5. Securities issued by an investment company registered under the Investment Company Act, except for a company license under the Small Business Investment Company Act, A company that has at least 95% of its assets continuously invested in exempted securities, a company that issues base amount certificates, or a company that is considered a money market fund under SEC rules. That's what margin stock includes. Requirement. And the things I just stated about a Small Business Investment Company Act is talking about an investment company registered under the Investment Company Act, except for them. And except for a company that has at least 95% of its assets continuously invested in exempted securities, or except for companies issuing base amounts certs, or except for a company that's considered a money market fund under the SEC rules. Requirements. Purpose credit is credit for the immediate, incidental, or ultimate purpose of purchasing or carrying margin stock. Limitations on credit extensions. Lenders may not extend credit for the purpose of ultimately buying or carrying margin stock in the amount that exceeds the maximum loan value of the collateral securing the credit. Lenders may continue to maintain any credit that was originally in compliance with Reg U, regardless of the reduction in value owing to change in market prices. The change in the maximum loan value allow the Federal Reserve or change in the status of the security. Allowed by the Federal Reserve or a change in the status of the security. Okay, lenders may not arrange for an extension of credit except under the same terms and conditions that the lender itself could lend under Reg U. Registration of non-bank lenders. Lenders who are not banks must register with the Federal Reserve on Form FRG-1 within 30 days after the end of the calendar quarter during which the amount of credit extended equals or exceeds $200,000, or the amount of credit outstanding at any time during the quarter equaled $500,000 or more. A registered lender may deregister by filing Form FRG-2 if it had not had more than $200,000 of qualified credit outstanding during the preceding 6 calendar months. Every registered lender must file Form FRG-4 by July 30th of each year. Purpose statement. Each bank must obtain a purpose statement for credit in any amount exceeding $100,000 that is secured directly or indirectly by margin stock. A Form FRU-1 must be executed by customer and bank officer. The form may be accepted by a bank in good faith, provided it does not have knowledge to the contrary. Non-bank lenders must require customers to execute Form G3, which must also be signed by a representative of the lender when extending credit secured directly or indirectly by margin stock, regardless of amount, revolving credit loans, or multiple draw loans. Banks must obtain a purpose statement at the time a revolving line of credit is established in an amount exceeding $100,000 and is directly or indirectly secured by stock. Non-bank lenders must obtain a purpose statement at the time the revolving credit arrangement is established, regardless of amount. For all lenders, the statement must be amended for each disbursement if all the collateral is not pledged at the time the agreement was originally made. Collateral requirements. Maximum value, loan value, margin stock. Currently, 50% of the current market value is subject to change by the Federal Reserve. Those two aspects are maximum loan value, margin stock. Collateral requirements. Furthermore, for revolving credit and multiple draw loans, if the loan is a purpose credit, the maximum loan value of the credit may the lender must call for additional collateral to bring the credit into compliance with the maximum loan value requirements. 3. The maximum loan value of non-margin stock and all other collateral is their good faith loan value, the amount not to exceed 100% of the lender would lend on a collateral puts, calls, and combinations thereof have 0% of the loan value. Single credit rule. All-purpose credit extended to a customer will be considered to be a single credit for purposes of Reg U. The value of all collateral securing all-purpose loans will be aggregated to determine if it is sufficient. If a purpose credit has been extended to a borrower, the lender may not later extend unsecured purpose credit to the same borrower unless the combined credit does not exceed the maximum loan value of the collateral securing the first credit. If unsecured purpose credit is extended before secured purpose credit, the loans need only be combined for purposes of applying the withdrawal and substantial rules, and if one borrower has purpose credit secured by secured stock and non-compliance and non-purpose credit, the lender must treat the loan separately, and the stock may not be cross-collateralized to the non-purpose loan. Withdrawals and substitutes of collateral. Lender may permit withdrawals and substitutions of collateral only if the margin situation on that day will not be weakened. Lenders may permit substitutions to enable customers to participate in reorganization, capitalization, or recapitalization or exchange offer made by the holders of or an issue of margin stock. Account that is properly margined. Withdrawal or substitution cannot cause credit to exceed maximum loan value of collateral. And the account that is under margined, for example, the stock value has declined since the loan was made. Withdrawal of stock substitution cannot increase the already existing loan to value problem. Renewals. A renewal or extension of credit will not be considered a new credit if the credit is increased only by the additional interest, service charges, or taxes with respect to the credit, and transfer between banks and between customers may be made and shall not be considered a new extension of credit if the loan was in compliance with Reg U. When made, a credit amount is not increased, the collateral is not changed, and the transaction is not meant to evade the requirements of Reg U. If the transfer is between customers of the same lender, the transferor must sign a statement describing circumstances giving rise to transfer, and the statement must be signed and retained by the lender. If the transfer between lenders and transferee must obtain a copy of the FRU-1 or FRG-3 and retain a copy. If no form was originally signed, the transferee may accept a good faith statement from the transferor that describes the loan purpose and collateral. Employee stock option purchase and ownership plans. A registered non-bank lender may extend purpose credit to ESOPs that qualify under Section 401 of the IRS Code without complying with Reg U. Special purpose loans to brokers and dealers. Certain types of purpose credit to brokers and dealers is not subject to the marginal requirements or the requirements to complete and maintain personal statements. Purpose statements. Before a credit extension, lenders must obtain and accept a good faith written statement from the borrower as to the purpose of the credit. The following types of credit may be extended on a good faith basis: hypothecation loans, I forget how to say that, temporary advances in payment against delivery transactions, loans for securities in transit or transfer, intraday loans, arbitrage loans, market maker and specialist loans, underwriter loans, emergency loans, capital contribution loans, and credit to clearing broker loans. What did I just say? Emergency loans, capital contribution loans, and credit to clearing brokers or dealers. Enforcement. Civil penalties of $100 per day. Criminal liability fines up to $100,000. Imprisonment for up to 5 years. Fear of penalties, the regular $7.5 a day for violations, $37.5 a day for unsafe or unsound practices and reckless misconduct, with pecuniary gain off the bank, and penalties of $1.375 million per day against persons who willingly commit a violation and knowingly or recklessly cause substantial loss to the bank or substantial benefit to the party.